All right, so we're officially done the 2023 investing year. We closed the year. S&P was very, very close to its all-time high. It did trade a little bit above 4,800 at one point, but apparently its closing high, all-time high, is 47.96. We closed at 47.69, so very, very close to an all-time high there. The Nasdaq closed just over 15,000. I believe it was around 16,000 is its all-time high. The Dow up 13.7%, 37,689. And then the Russell 2000 closed at 2027, and it was up 15%. So very, very good year. Honestly, this is one of the best years. Not the best year, but I mean, the Nasdaq had its second best year since 2009. So crazy good returns this year. I mean, there's a lot of companies out there that easily outperform this, that I'm sure a lot of people own. So congrats on that. But I wanted to give my predictions going forward into 2024. Now, I'm going to be straight up and say anything can happen here. Literally anything can happen in 2024. I could see the Fed cutting earlier and closing up nicely again. But then I could see things going awry and it being a massive down year again, right? So anything can happen. I mean, honestly, the least likely scenario in my mind is another very, very bullish year, because I mean the likelihood of two basically like very, very good return years in a row is pretty unlikely, right? So honestly, in short, my base case is we have a choppy first half of the year roughly. And then we probably have a correction early to mid-year, and then we close the year up, probably up a little bit, meaning we're probably going to see a new all-time high on the S&P and the Nasdaq, especially the S&P. That's just what I think, right? Because the data seems to show that we're going to see rate cuts as early as March, and we're probably going to see anywhere from about 2 to 6 cuts, right? Now, again, the big question is, we will know exactly what's going to happen based on why do they cut rates. If they cut rates because we have a black swan or something really bad, which definitely could happen, we're probably not going to have a good year, right? We're probably not going to have a good year. If they cut rates because it's a mild recession or maybe even no recession at all, most likely my prediction would be a mild recession. They cut rates. We probably see a correction, like I say, maybe late Q1, early Q2, maybe even Q3, and then we close the year up. Like I say, I think we see a dip again in the summer, right? Or maybe even in the spring, right? And we close the year up in Q4 again, right? That's just my prediction as far as that goes. But if I'm being honest, the most bullish I am on any asset, honestly, it's going to be Bitcoin, because we have the halving coming up. We have ETFs that are looking like they're going to get approved, and we could get a rate cutting cycle. That's going to mean every single bullish indicator you can have for Bitcoin, it's going to go through, right? And again, I don't think people realize just how significant halvings are, because again, if demand stays exactly the same as it is right now, well, guess what? The supply of new Bitcoin is getting cut by 50%, meaning we should see a 50% return just based on that. And that's not even including lost coins and increased demand, right? More and more people getting in. So again, honestly, the thing that I am the most bullish on is Bitcoin. Like, honestly, I don't even think it's close, because I think that, again, a lot of people think that stocks are overvalued right now, which as a whole, I don't think it's true. There certainly is a lot of overvalued stocks, but the market as a whole, I don't think it's all that overvalued, right? Again, a lot of people say, oh, well, the look at all the returns that were driven by 7 stocks or whatever number you want to go with. And it's like, okay, well, that's true. And I think that's a little bit concerning. But on the flip side, you have to look at the Pareto principle, right? In that, I mean, 80% of your returns are going to come from 20% of or the square root produces half the value, right? So again, if you have 500 stocks, well, half the returns should be from the top 50, right? And I mean, 25% will be from the top 5. So when you look at these disproportionate returns coming from some of these bigger companies, well, that's not that crazy. I mean, it's kind of like saying, well, oh my God, this guy made $1 billion last year compared to all these people making 50K. Like, okay, well, again, the Pareto principle. Look up the Pareto principle. It explains all this stuff, right? Disproportionate outcomes happen, and it's natural. So, again, I'm not necessarily a fan. Like, I mean, I don't mind Google. I don't mind Amazon. I think Microsoft certainly is expensive. Nvidia clearly is expensive. So again, I'm not necessarily a fan. I'm not saying you should necessarily be buying a lot of those companies, but what I am saying is that, again, the Pareto principle is a thing, and it's pretty tried and true, right? Again, if you have a 1,000 salespeople in a company, right, the top 100 are going to produce half the sales, and the top 10 are going to produce 25, right? So again, I don't think that that's as concerning as people think, right? So again, oil, that's another big one too. Oil, again, it all depends. Like, oil is one that's super unpredictable as well, because we easily could see a war break out, and that would be good. Or we get a recession that's worse than what is projected, in which case that'll be bad. So oil is really unpredictable. Again, my base case is probably somewhere in the middle. We probably end up somewhere where we're at right now. I think probably like 80, maybe $90 a barrel is probably where things, they kind of want things to be. So that's probably where we end up. And again, one thing that people need to keep an eye out for is that anytime we get a correction, that's when you really want to keep an eye out, right? That's when you really want to keep an eye out, right? If we get a recession that's worse than expected, if it's me personally, again, just my opinion, I would be backing up the trucks to try to get as much money into the stocks that I like. If not, I'm just dollar cost averaging into things that I think are fairly priced or undervalued. Again, that's just my opinion, right? That's just my opinion. I'd love to hear what other people think. But again, to summarize things, I think that we easily could zoom to honestly new all-time highs in the first month or two. We definitely could see that. But I think that the first quarter to half the year is kind of choppy. We probably see a correction, I would say, for sure, the summer at the latest. We'll see a correction. Maybe it's 10%, 15%, maybe 20, right? Maybe 20. And then that's probably right around when the Fed's going to be cutting. Maybe it's a 30%, 40% drawdown. Nobody knows, right? But I think we see a drawdown into the double digits. It's very unlikely we won't see a double-digit pullback at some point in the year. When that happens, that's when I will be starting to pile things in bigger. Because right now I'm sitting a little bit more cash than normal. Not that much, but a little bit more. If we see a double-digit pullback, that's when I really will be backing up the trucks. And again, the other one too, Bitcoin, I'm as bullish as I've ever been on Bitcoin. Again, I think we're going to see a really good year. I think we probably see new all-time highs the summer, maybe even sooner. Again, we could shoot to new all-time highs right the week of the ETFs coming out. That could be a week or two from now, right? We could see new all-time highs as soon as then. But I think it'll probably take a little bit longer. I think we maybe add 5,000-10,000 to Bitcoin's price when the ETFs come out. And then that's just going to provide more and more liquidity, more and more buying. And then we get to halving. So again, I think we'll see a new all-time high for sure this year. And then we're going to zoom to 200,000-300,000 probably roughly will be the peak for this cycle, and then we'll go from there. So anyway, if you liked the video, please hit that like and subscribe. Please like, comment, all that good stuff, and stay tuned for more.